opportunity presentation. I hope all of you guys will get somebody on to attend. I'm supposed to have a couple of folks on myself. And the more that we get different people on and see all the different personalities, and heck, man, I'm not anywhere near like David or Ellen at giving presentations, but you know what? I can read slides. So I encourage you guys to get involved. Practice, practice, practice. So are we ready, David?
Yep, you're ready to go.
All right, guys. Well, today we're going to talk about some things that actually confuse people, and and that is, what is a prepayment penalty versus a prepayment discount? I want to talk first about how we rate things up, how each one of our lender partners have their own different guidelines for funding. And for example, here, guys, if you were out and you get a $10,000 client, a funding deal, then just so you know, the cost of those funds are going to be anywhere from a 11.9 to pay it back all the way to a 14.9. And if it's so bad that we shouldn't loan them money for a pack of cheese crackers, it could be 15.9 on that. But the reality is this: is the cost of these funds more expensive than the fact that they can't get those funds? Because if they could use those funds and turn that $10,000 into 20,000 or 30,000, or they need that money to fight another day, which one's more important to them, the cost of funds or the fact that they don't have them if they can't use them? And by the way, David talks about this all the time. I don't talk about it enough, but if someone really doesn't need the money, it doesn't make good sense for them to take it and put it in their bank for a rainy day, because this is expensive money. But it's also money that's not available out there, that's going to take that small business person, like David says, that these people, when you fuel their ingenuity, you fuel their business, you fuel their ideas, they can create incredible things. That's why their entrepreneurial spirit in these small business people is amazing. But I want to talk to you about what is really the difference between prepayment discounts and prepayment penalties, because it gets really confusing. Well, let me tell you the way it works in our space, in the revenue-based funding space. A prepayment penalty in our space means that if you decide you're going to pay this off, you're in addition to paying it off, you're going to pay the principal, you're going to pay the cost of funds, and there's as high as $2,500 penalties that are out there that go on to it for you paying this thing off early. They will let you pay it off early, but they charge penalties for you to do that. Now, we don't deal with any lender that would do such a thing, but I'm telling you, they're out there. I've seen them. So a penalty is an additional cost added on to the principal and the cost of funds. So let's say $1,500. So you would have to pay back that $1,500, the principal plus the remaining cost of funds. And that's what a prepayment penalty is. And a prepayment discount is going to be the discount that you're going to receive off of the cost of the funds. Where you see it's that 10,000 where you could pay anywhere from 11.9 to 15.9. Well, that extra 1,900 to $5,000, whatever that number is, that is the cost of funds. And the A paper and the B paper lenders do things a little bit different. Let's take an example right here of a $50,000 funding. Let's say it's a 145. They're going to pay back 72.5. Most of the B and C lenders that give you a prepayment discount if you pay it off in the first 3 or 4 months, almost none of them go but beyond that, and versus the A lenders that give you that discount for the whole term of the program. So let's look at month one. On this 50,000, you got your discount on that 50,000. It would be at 12 points would be, and I got these numbers right here a little bit wrong right here. forget about that for right now. But month one, 50,000, if they're going to get a 12-point discount, what they do is they go back and they say, okay, so you're paying it off in month one. So we're going to take that 50,000 instead of the payback being 72.5, it's going to be 66.5, and you're going to get a 12% discount, which is $6,000 on that particular deal. Then they go, if you do it in month two, it drops to 10%. So all they do is take that 10% off of the 145, and then that's what their rate would be. And so you would wind up paying back the principal plus that extra cost, which would save you about 5,000 at 10%. And then on the third month, you're going to get an 8%. And some of them will go 4 months and drop that to 5. Most of these C and D lender programs, and I'm not going to mention their names, but they're really high cost programs. They only give you a prepayment discount if you pay it off in the first month, and that's only 4 to 5% of the cost of funds. It used to be, and David can attest to this. It used to be in our industry we would get like 10 and 20% off of the entire amount owed. If it was if it was a 10,000 and you pay them back 15, you'd get it off of that. It doesn't work that way pretty much with anybody that we're doing business with. So these are how the B and C lenders do it. Usually around 12 on the first month, 10 on the second, 8 on the third, and if I have to get a fourth month, it'll drop down to about 5%. Here's how Here's how the A lenders operate. It's totally different. Let's say that we're doing, whether it's an on deck, a rapid, a credibly, capitals, whoever it is with the A lenders. Let's say we get 50,000 and the cost of funds is a 1.29. So your total payback is going to be 64.5. The way they work is they're going to give you anywhere from a 20 to 25% discount almost, and that's pretty much standard with the A lenders throughout the whole length of the term. But that is, they don't care when you pay it off. You can pay it off on month 1, 2, 3, 4, 5, all the way through 18 months if that's what the cost of the term. You're going to get that percentage off the remaining cost of funds. Well, the cost of funds is $14,500 because on a 129, if you got $50,000 that you're going to loan and you do a 129, they're going to pay back 64.5. So 20% of that 14,500 is $2,900. Everybody with me? If it's 25%, that 25% off of that 14.9 is $3,625. But the difference is between that and your first 3 or 4 months discounts is that at any time you pay it off, they take the balance of what's owed and they calculate what the cost of funds difference is right there. They're not discounting the principal. What they're discounting is the cost of funds. So you're always going to have to pay back the principal that's remaining. So if you paid on it 50%, you're going to have 50% of the principal remaining. You're going to have 50% of the cost of funds, whatever that calculates to be. That's where those 20 and 25% discounts come off of. It's very impressive to talk to a small business person and say, we're going to give you, these are not loans or advances, but we're going to give you 20 to 25% off those cost of funds. I never talk about interest, even though some of the A lenders do have certain states that they consider it a loan. We're not going to go there. These are all advances, and in whatever state they're in, when we give them the discount of 20 to 25%, then that 20-25% is whenever they pay it off. They can pay it off month 1. They can pay it all the way through the term of the offer, and it can go to the very last month, and they're going to pay it off 20, 30 days early. So that's how that is how discounts work. Now, there's been a lot of cases over the last couple of years where someone's come to us and to get qualified for a line of credit is much more difficult than getting qualified for just regular funding with A lenders. They're just different stipulations, and as you know, a lot of times, like a 129 rate right here, that's going to be less expensive if they intend to, then a line of credit, if they intend to keep this thing maxed out for the whole term. In other words, if you're going to get a line of credit of, let's say, $50,000 line of credit, and you're going to max it out, and you're going to just pay your minimum every week on that, you're way better off by, a ton, if you just go ahead and take funding. The problem has been this in the past, and we've lost not because of the cost of funds and all that, but we've lost probably at least a dozen or 2 dozen just this year that are larger amounts where small business people have come and said, listen, I'm only going to use this stuff for 4 months. I want the 18-month term, but that 18-month term is going to keep my payment low right now, but I might pay this off in 90 days. I might pay it off in 60 days. What can you do for me? Well, right now we got a 20 to 25% discount. But then they come back and say, listen, I got good credit. The only reason I'm not getting it from a bank is because they are asking me to put up collateral. So I just don't want to pay back 20 to 25% discounted. I don't want to pay back the other 75 to 80% on the cost of funds. I know you discount it and all that, and they don't do anything with it because they continue working with the bank, and here's another situation. They know they're gonna get their bank loan, or they're gonna get an SBA, they're gonna get something, but they're gonna get it in about 4 months or 3 months. They need the money today. They just don't want to, when that day comes, pay back all 100% of or 75 or 80% of the cost of funds. Well, one of our A lenders has partnered with us on a new product offering. It's on a limited time basis right now. We're throwing it out there to see how this works, to see what kind of a response we're going to get. We're one of the special ISO groups in the nation. They love us. They love David Allen Capital. They love David Rutz, and they love our staff. And they're saying, all right, let's try this for a limited time offer and see how it goes. This is 100% prepayment discount offer. You heard me right, 100%. So here's how to work. Let's just take this example of a $75,000 term loan, and they use the word loan, so that's the only reason I did there. That's how they use it, but a term program. So 75,000, the rates of 138 for and we've added that's already got all of our points and everything added as full commission, or just not quite full commission, but close. Here's the difference in the two. I'm going to be able to go to them on certain situations, not every single one of them, but in certain situations, I'm going to be able to go to them and say, you got two choices. Here's what it costs to have $75,000 on a 12-month deal. All of our points are added. Blah 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 blah, and I'm going to talk to them about points, of course, but I'm going to talk to them about a 138 or 134. So the 134 is what they can get with a 25% discount, prepayment discount. But if they want the 100% prepayment discount, then here's how it works. They say yes, they want it. When let's say 4 months from now, they say I'm ready to pay it off. Well, this particular lender, if you get 50% paid in, they waive all the cost of funds that are owed anyway. But what they're going to do is one step further on this particular product that's going to be a limited time out there, is they're going to say, okay, you pay me back in 90 days. And then after that 90-day period, or whatever it is, whenever they could be paid back the next week, but let's just use 90 days. They pay it back in 90 days. Then all they got to pay back is the remaining principal amount. They waive and do away with it. They give them a 100% discount on all of the cost of funds from that point on. Not a 25%, but 100% discount on all of that. This is a big deal if they keep it coming and it works, and they even give us a little thing. Here's the best way for you to pitch or discuss it: is the offer comes with 100% prepayment reduction, which waives 100% of your unpaid interest if you repay the principal balance in full before the end of the term at any time. And at this point, David, I think I'm just going to see, and I can go through the rest of my presentation talking about select funding and the other things I'm going to talk about, and you can come back to this, or you can go ahead and speak on this if you want to right now. And you got to
Yeah, I'd like
there
to
you go.
talk about the commissions on it because obviously, guys, you can stop sharing your screen. Wait, I'm going to share mine in a minute.
All right.
This is a great product. This is a spectacular product because I've had several clients myself who were looking for larger fundings, but only needed the money for 3 or 4 or 5 weeks. And so this is spectacular for them. And I'll be reaching back out to a lot of them. But obviously, guys, if they, let's use logic for a minute. If you gave someone $250,000 today, pay us a commission on that $250,000, and they pay it off in a week, and they only owe 250 back, your commission alone would put the lender at a loss, right? They'd lose money because they've paid you a commission. Paid us a commission, we paid you a commission, and they pay it off and only pay back $250,000, they'd lose a lot of money. So what they're doing as a test is they said, listen, because we're like, we're not going to promote something we can't guarantee a commission. We can't pay a commission and then claw it back. So the way this is going to work is you're going to earn whatever the bonus revenue is. I'm going to show you a screen in a minute. You're going to earn the bonus revenue is. We're going to assume they're not going to pay it off in 90 days. But if they pay it off within 90 days, there's an impact to your commission. That's how it works. You're going to get half commission no matter what. No matter what. Even if they pay it off in 4 days, you get half commission. Someone gets $250,000 tomorrow, and it goes into your back office as $250,000 funding. The bonus revenue hits, everything hits. You're gonna see your commission email, the full 4% or whatever commission level you're at. You get 4% on that income, and then what's going to happen is we're only going to issue half of the commission now. You're going to earn it all. We're going to issue half the commission now. It's going to go right into your Relevate pay card. The other half is in arrears for if the client doesn't pay it off in 90 days, then you get the other half. If they do pay it off, you don't get the other half, obviously, because our provider lost money, right? So you will get half commission no matter what. And if they don't pay it off, you get the rest of the commission. Make sense? So I got a couple screens here I want to share with you in case you're confused. This is spectacular. The amount of clients I've lost because I only need the money for 30 days. I only need the money for 30 days, right? So let's look at this real quick. All right. I know Wade already talked about this. If they pay off, the merchant wants to pay off early, they pay the balance due, and that's it. So again, they got $100,000 funding. They got to pay back 130, but after 2 weeks, they want to pay it back. They get 100% discount. They don't owe the 30K. This is unheard of. They only pay the principal back, right? This is unheard of. All right. So that's the product feature. And for all those people say, I may only need it for 3 weeks. Well, good. Now you got to qualify for it. I wish every one of our providers did this, right? But this is a beautiful situation. No prepayment penalty either, like a bank charges. This is better than banks. Better than banks. If they have the money for 2 weeks, they got it for almost free. I know there's some funding fees when they get the money, but this is unheard of. No prepayment penalty. Unbelievable. I hope this is super successful and they keep it. But for right now, I'm jumping on it. I'm calling all my clients. Okay, but here's how the commission impact is. You earn full commission. However, so you're going to get an earnings statement that says full commission. You're going to get the email that says full commission. But then you're going to get a follow-up email that says, keep in mind, this is a special project. You're getting half of your commission wired to you now. The other half is in arrears. So if the merchant pays it off at any time in 90 days, the other half isn't paid. Okay. And then we'll reissue it and we'll lower your bonus revenue, residual revenue. If the merchant keeps the funding for at least 90 days, then we're going to issue the other half within 1 week of those 91 days. So if they pay it off in 90 days, you don't get the commission. Okay. The rest of it, you keep the first half. No matter what, you keep the first half. Even if they keep it 3 days, you keep the first half. Now they would lose money. Our lender would lose money. You got to know that. But they understand they're working on the law of numbers, and we're like, we're not getting paid and clawing back. They did their job right. We don't want to sell it then. If you're going to take our commission back, if they pay it off in a week, set it up, position it in such a way that using your law of numbers that we can keep at least half commission. So this is where we're at, or get paid at least half commission. So Commission impact, couple more questions you might be having. Someone does that $100,000 funding, they got to pay back of 130. Let's say the bonus revenue is 8,000 only. I know bonus revenue is usually 10,000. On this provider, it's a little lower than normal, but let's just say it's 8,000. It's probably more than that, but let's just say it's 8,000 bonus revenue. So you would earn $3,200, right? But you're only going to get 1,600 now. The other 1,600 will be issued if they don't pay it off within their first 90 days. All right. Your residual revenue would still be 800. It's going to go in immediately. We're going to do two. And as you guys know how we do residual revenue, we do a maximum 200 a month for the however long it takes to get through the amount of people or the amount of, sorry, I'm looking at the waiting room, letting people in. The amount of revenue it gets to get to 800 residual revenue. So $200 now, 200 each month. But if they pay it off early, then you wouldn't get any future residual revenue. All right. You only get it as long as they don't keep it, or as long as they keep it at least 90 days. So if someone, let's go through an example. Someone gets a funding right here, this $100,000 funding today. Let's say the bonus revenue is 8,000. You earn 3,200 minimum. You could be amped up. You could be something else. You get $3,200 today earned. 1,600 of it sent to your Relevate bank account. The other 1,600 is sitting in an arrears waiting to be sent to you. Okay. You'll get 800 residual revenue today. 200 is going to be applied today. Next month, 200 more will be applied as long as they don't pay it off. If they pay it off, obviously, we can't keep giving residual revenue if they pay it off within 90 days. But assuming so let's say they do, they pay it off in 2 weeks. You'd make $1,600 and have 200 residual revenue one time. Okay, so go through this example. You help a client get 100 grand. They say, I only need it 2 weeks. You go, no problem. Check this out. You pay a funding fee, but anything after that 2 weeks, you pay it off. You'll only owe the 100 grand plus, minus whatever you've already paid. That's it. That's all you own. No discount, no penalty. That's it. That's all you got to pay back. Wow. And they proceed. You just got to know you're going to get only 1,600 right now. And if they do pay it off in 2 weeks, that's all you're earning, which is pretty darn spectacular because I can tell you our funder didn't earn that. Okay. So you're earning more than the lender who gave the money. This is unheard of. That's why it's a test, guys. And you'd also get 200 residual revenue today. All right. To qualify you. And then you'd have next month, because they paid it off, you wouldn't have any more residual revenue and you wouldn't get that other extra 1,600 bucks. Okay. But let's say you do the same thing again and it goes 90 days and they don't pay it off. Well, then on day 91, ching, ching, we're notified they haven't paid it off yet. Hopefully they'll pay it off soon. If they pay it off day 95, you still get full commission. But if they don't pay it off in 90 days, then you're going to get your other half of your commission. And by then you'll have already had 2 months residual revenue and you'll get the remainder of residual revenues as well. All right. So if they pay it off early, your minimum is half commission and 200 residual revenue. If it's a larger deal, that's the minimum you're going to get. Minimum. We're not taking your residual revenue back. We're not taking your commission back, even if they pay it off in 3 days. All right. You get to keep that. That is spectacular, unbelievable. Now, we're not coding this into our computer program yet. So what's going to happen is you'll get the email saying you earned 3,200, only 1,600 is going to go in your account. We're going to send you a separate email that says, don't forget, this is part of the 100% prepayment plan. So we only issued 1,600 of your commission. Now the other 1,600 will be issued if and when they don't pay it off in 91 days, right? So you'll get a separate manual email, maybe a little clunky. So if this program continues, of course, we'll hard code it in, program it into the computer. Your commission email would say all that. Right now, it's all automated. So we're not going to turn any of the automation off. We're just going to add a manual email to you to inform you. So understand the product, understand how it's going to work. And it'll be a little clumsy because you get a manual email after the automated email. But we believe it's worth having the clumsiness to try this product with our lender. And these are actually term loans. So these really are loans. And so if this goes as well as we think it'll go, then we'll obviously program our computers to speak differently to you and have everything in line better. So that's what I wanted to share with you. Hopefully that makes sense. And I'm blown away by this product. That's all I got, Wade. I don't know if we want to go to questions now about this, or if you got more to talk about.
I'm just gonna do one quick thing and then we'll go to questions now. Let me just share this. I want to go to, you guys can see that, right?
Yep.
All right, let me just move on here. Let me just go down. Okay, and I just want everybody to remember select funding. These offers are out there, 1.8, 1.9. There's a lot of them. I got the one I want to talk about today, and then we can stop. I mean, we got one right now. It's a construction company. The select rate is 1.29. It's a 54-week deal at $460,000. We're waiting for all the paperwork to be signed. This stuff is working, and I'm telling you, the difference of just 1 point. That 1 point difference. I mean, it came in a little bit higher, and we were able to get it back to where we needed it to be under that 130. Made all the difference in the world. They accepted it, and we're in the process of going through the funding now, David. So I just wanted to throw that out there and let them know that this happening is happening every single week with offers.
Yeah, I want to just say, when I first started DAC, before you and I met, Wade, and you were doing your own funding company side, we were both merging eventually, obviously. But, I didn't have providers to serve a lot of the smaller clients, like the instant funding or the gig workers or the bad credit or the under 700 credit or the under 650 credit or the under 2 years of business. I didn't have those. And it was over time that I learned the industry and realized who to use, who to not use. And we stubbed our toes many times working with providers that we thought were impeccable, heard were impeccable, only to learn from our customers weren't impeccable. And so, over time, each time we do something, guys, when I say I'm excited about this, it's because we're serving. I'm not asking you to go out and get 100 customers because of what you can earn, although that's pretty good too, right? I'm asking you to get 100 customers because thousands of people out there, business owners, need us. They need us. So many people forget how it helps. So, we don't want to offer something we can't earn on. We wouldn't have marketed this product if they were going to take back all of our commission, of course, right? So the fact that we can get half commission by giving someone to a customer where they can literally get the money. Yeah, they got the funding cost up front. I mean, just like you buy a house, you're gonna have a closing cost. So there's some cost up front. And by the way, we don't get any of that, just so you know. That's all goes to the funder. And they do have costs of underwriting and background checks and all kinds of stuff that they have to cover, right? But you give someone $250,000 and they pay it off in a week, and you're not making them pay a penalty, and you're not making them pay anymore. That's an amazing product. So the fact that we even get 1 percentage point, let alone 3% or 4% of the funding amount, or half of that, 1.5 to 2%, is unbelievable. It's just unbelievable to me. So we wouldn't offer products that don't help customers. Every product we have helps customers. And so if you can just keep this in mind, and I'll end with this. It doesn't matter whether it's Bank Breezy or our pharmacy or anything else we do. It's there to help the customer and also pay you well. But we start with the product to the customer before we go to the commission. Is it a good product for the customer? Yes. Then we can feel like you and I can feel like we're honoring God and honoring our customers by helping them with it. We're not doing it just for the commission. Yet, you also have to be prudent with your time and earn money. So to get a half a commission on something while helping a customer in such an amazing way is spectacular. So I would just say, go back, make a list of all your clients who've applied or didn't apply because they didn't need the money that long, and let them know about this, where they can pay back the principal balance and not pay any of the interest due and not even pay a penalty with this new product. And I would go tell the world about it right now. It's spectacular. That's it. That's all I got. Wade, calls
Okay.
yours. That's it. Oh, I
All
see
right.
Matthew's got his hand up. Matthew, you got a question, buddy? Go ahead and unmute yourself.
I do. Wow, this is quite incredible. I'm trying to get my head around it because it's, what's the catch? What's the catch? What's the catch? I'm looking at this. I'm thinking to myself, okay, how in the world are they going to be able to do this? Now I think I figured it out. Wade, David, you can tell me. You're telling me it's going to be a 20% adjusted reduction in the bonus revenue because of the trade-off and their risk. In other words, they're risking. So
Let
they're
me
not.
just stop. Let me just stop. I didn't say it was 8%. I said it's about the computer calculates and every deal is different. So it's not a 20%. We're not reducing bonus revenue. This company that was doing this has always paid us a lower than full commission. And so they haven't lowered it for this. They've
Okay.
not lowered the bonus revenue for this product. It's
All
not
right. So
reduced.
okay, this is one of the 8 paper lenders, and they're
Yeah.
paying. So okay, so they're
So
going to.
let me help so we don't go through this mental mind map. Wade and I disputed this for 4 days. I said it's impossible. I want to see the small print. It's impossible. There's no way they're going to let us keep half the commission
Right.
if they pay it off in 2 days. It's impossible. They'll lose money. It's impossible. I'm not launching this. There's no chance. I don't care what we're being told. I want to see the small print. And so it took us. This has been informed to us for quite a while. When I was in Greenville, we were talking about this. So, but after a lot of discussions with the executive teams and seeing the small print and fine print, they're willing to take the risk. So it's not going to make sense. They will lose money. They will absolutely lose money if someone pays. You cannot cover it in the funding cost. I've already told them you will lose money if someone pays it off in 2 weeks. We know. We
This is
know.
insane.
Yeah, it's
This is
insane. To me, it's insane.
insanely good, and of course, not to be abused. Right? Don't advertise. You can pay it off in 2 weeks and pay nothing. I get it.
No,
So
I'm advertising it. I've asked them, can we
really,
that's how we want to promote it to the client. Can you yeah, absolutely. You can tell the client they can pay it off at any point and they pay off whatever the principal dues is all they pay.
And the only
okay.
people that are going to get this, David, are the ones that can already qualify for select funding.
This is hard to qualify for, as you can imagine. So
That was my
this
next
isn't
question.
for everybody.
Yep. Okay. Well, that's my next question. So the criteria and the qualifications are exactly the same for select funding, or is it any different? Wade, is that it?
That's
Those
it.
are the
And the only other thing is their underwriters have the right to take an industry type and say no. And I have no, they got that right no matter what they do. So, but this is my criteria when I submit it is the same the same criteria as select funding, but I don't have the final say. So they may say, yeah, we're not going to do it with this one because because we're having to pay off another lender.
Understood. No, again. So once just to get the facts out again, completely understandable. Even paying half the commission, whether I'm at 4 or 8%, amped up, triple amped, you're gonna pay half of what I would normally have gotten, and then the other half is going to be paid after 90 days. Did you say after 3 months or 1 month? Dave?
You get just so we're talking legally correct. You get 40 to 80% of the bonus revenue. Not 4 to 8, right? But 40 to 80% of the bonus revenue. But I know we speak the same thing. I just correct for anyone else watching. And then the other is going to be paid 1 week. So after 91 days, they don't pay it off, and after 91 days, then the other part of the commission is available, but it's not immediately. So we say within 1 week after the 91 days, you'll get the other half. Yes.
Yep, it's retained. It's amazing. All right, I'm going to hang up from here and go to work. It's great stuff, man. Thank
Love
you.
it. Christopher Sanchez, how you doing, buddy? You got a question?
Wow, is all I can say. Holy cow. The financial impact for businesses to grow, this is just, it's phenomenal. Phenomenal. My question is, how long will this incentive be lasting for?
We don't know. We know it's here for August, but we don't know what's going on in September. So, I mean, Wade, wouldn't you agree that they want this to be an ongoing program that they fine tune and keep in line? But
I caught after you and I had our heart to heart about this, and and I called and talked to the vice. I called my direct contact. They assigned someone to our account, And I said, I believe everything you're saying. I've read all the things, but I need to talk to somebody else. And the vice president called me back and said, and the only reason, and by the way, they wouldn't give 2 cents about calling somebody back. They're big. If we weren't one of their priority ISOs, they call us, I forgot what the term is. So they called me back and she went through the whole thing. And I said, you're going to lose money if they pay it back the first month. She said, the law and numbers say we won't lose money over time. And I said, well, you are going to, the law and numbers on the one that pays back in a week or 2 weeks or 3 weeks, you're going to lose money. Tell me how you can afford to do this. She said, they're not going to pay it back in 30 days, but we hear you. And we do reserve the right in the future to adjust it, but we think we understand what we're doing. I said, I'm sure you do.
So, but that could impact our commissions. They may come back and say, okay, we can't let you keep, and so for now, this is in August, it's going right now for August. So we got 2 weeks minimum. It'll probably continue in September, but we don't know until we see, because they can pull it in any time and we can pull it in any time if they make changes that we just don't want to accept, right? So right now it's live. So let's rock and roll with it.
Oh, no,
I think that's everybody.
This is
Go ahead,
just,
Chris.
this is just so phenomenal. Talking about serving the business community. No one else is doing it. No one. I just had a talk with a bank manager yesterday, and they were talking about coming in September. We're going to be restricting now. We're not going to be giving out as many business loans because we foresee it, the future, it's just being a tougher economy. But for us to have this opportunity to present something like this, wow.
They got to get approved, but there's a lot of people who can get approved for big funding who'd rather take this because they'll pay a penalty if they pay off their loan early. So it doesn't matter what the repayment amount is if you don't have to repay it. Doesn't matter if you give me 7 years and you're going to make me pay a huge penalty if I pay it off in 6 months, like with a bank loan. Okay, well here, no penalty, pay it off early. We can compete with banks with this product.
Well, David, the exciting part about that is they can take the longest term with the lowest payment right now. And that's the beauty of it. You don't have to take a short term. Oh yeah, I can still get you a 1.24 on it instead of a 1.38. You can pay it off in 6 months. Why do that if you can take the longer term? You're going to pay it off in 90 to 120 days anyway.
Yeah, I think these are all 12-month terms, if I'm remembering correct.
Yeah, that's right. They're 12. Yeah, they're 12 months terms.
These are all 12 months, so they have no choice. It's a 12-month term. But again, guys, you bring me money and you say I can give you $250,000, Dave, at the Bank of Chase, and it's a 7-year term. Your payment's only this low. That's awesome. But what if I want to pay it off in 6 months? Well, you'll pay a huge penalty. Okay. Now this DAC deal, I can get you that same $250,000. You got to pay it off in a year. Your monthly payment or your weekly payment is going to be a little bit more right now. But if you want to pay it off in 3 weeks, you pay no penalty. You only pay the principal that's due. This is unheard of. This now takes us to a whole different level for the best customers out there. The best. And is there a max of $250,000 on this, Wade?
Yes.
Okay. So it's a max of $250,000. And so anyone who's bank ready, I'm going back to all the bank eligible people saying get funding tomorrow and have no prepayment penalty. Let's roll. Let's roll.